And welcome to the channel, guys. My name is Maxime. Here we talk about the crypto investment, stock investment, some global events in the world, geopolitical ones, and some macroeconomical things. And today I would like to raise the warning flag. Now I'll show you what's about and what I am personally expecting. So as you can see, guys, here is the chart of the S&P 500 index. And what do we see, for example, for the last almost 2 weeks is the downtrend, small correction. But what me personally expecting of that is the volatility, at least volatility period, volatility zone. And if we zoom out and take weekly chart already, we see that we have this really massive uptrend beginning in the October of 2023, and it brought us like almost 30% of the uptrend, and we had almost no corrections for that. Now we at least need to have some correction to mark the market as a healthy one. But the problem, what I see now, is that the fundamental behind the scene is not really the most likely for the continuous uptrend, for the continuous growth. And in one of my last videos on the channel, I was speaking about the upcoming, let's say, economical crisis, and I provided there 3 macro trend indicators, and usually they were somehow, let's say, predicting, or they were marking that the potential for the recession is highly likely. And now let's get down and let's see what do we have, what's the current situation in the macro trends. And the first one is the US national unemployment rate. So actually I believe I don't need to explain what's that about. And as you can see, again, when we have too low unemployment rate for somehow long period of time at around 4% level, once it's done, we start growing and the recession is coming. I will not get into details now because it's not the topic of this video, but there was the economist with the Phillips, last name was Phillips. He was one of the first people who saw that correlation between inflation and the unemployment rate. And once we have the low unemployment rate for somehow longish period of time, it will cause us the inflation, and inflation usually will bring us the recession. That's normal market trends, that the cycles we have in the market. And actually, what do we see now? Let's start with the 2000. We had the low unemployment rate at around 4% level, and then later we started to grow. So here we met the crisis, the dot-com crisis, we all know it. Later, 2007, we had a low unemployment rate just slightly above the 4% level. Again, right after that we met the crisis, the mortgage crisis. So the huge event, the global economy crisis. Right after that, again, we had low unemployment rate, again at around 4% level. And again, you know what, we had some COVID crisis. And what I see now, totally the same situation. We are at around 4% level of the unemployment rate. And now, if you can see, the chart just started slightly, going uprising, like going to the top. So we have higher lows, higher highs. I'm not sure, like, will it be now or will it take us a longer time, but I'm more than sure that in the close future we might see again this rise of the unemployment. And usually it's not depending just because. It's not the only problem we face, let's say, in the economy. Because with that, exactly with exactly that parameter, we need all other list of really unpleasant stuff. So that was the first one, that was the US national unemployment rate. The second indicator I was providing in my old video was the industrial production. So actually, what's this chart about? It measures the real output of all facilities located in the United States, as manufacturing, mining, electric, gas utilities, etc. So what do we see here? We see that again, when the index, when it starts to struggle, when it starts to meet some controversial downwards movement, usually it indicates that there are some problem in the economy, and again we might face some crises. What do we see now? As I was speaking in that my previous video, currently now we are just slightly above the 100 level of this index, and we are facing the problems with breaking through the 102, 103 level. And here we see the clear, very clear zone. It was starting in the 2008, and from that point of time we didn't really go upward. That point we had like 102, then we got back. We rose up, again 103, we get back. Rose up, 104, we got really drastic downwards movement. Again, got back 104, and now we are struggling, we're not moving upwards. And here is the risk that we might face the downward movement sooner or later, but it will be for sure. And now the probability for that it's much higher. Like, I know you to understand, I'm not trying to predict the market because I don't know what will be in the future. I'm not trying to guess. I'm just trying to compare the possibilities. How likely is the event that might happen or might not happen? And I'm just evaluating the possibility, the probability, that's it. Nothing more. I'm not trying to guess. And again, according to what I see, and I believe maybe what you can see on the chart right now, we may face the downward movement of the industrial production index. And again, as usually, it brings the inflation, the higher inflation, the recession period, and the economic crisis. I don't know, will it be like really strong, severe one, or it will be some light? Nobody knows, but that's what we see. And the last indicator is the capacity utilization rate. So kinda not similar but connected to the industrial production. But here what we see is the percentage of resources used by corporations and factories to produce goods in manufacturing, mining, and electric and gas utilities. So what do we see here? Again, really nice and beautiful chart. So almost each and every, let's say, crisis, economic crisis we met, I would say it was starting with the lower resources utilization. So for example, again, let's take the 2000 as the starting point. We had some nice 85, at around 85 we had the 85 levels, so we had the index, the chart, and then it started to decline and going downwards. So exactly here, I believe we already started to meet this recession, the preparation for it. And that was the zone where everyone should have been really paying a lot of attention here, like what's happening. Maybe if we have some fundamental problems in the economy. And actually here we met it. Just like 6-7 years later, again we have struggles to go upwards. The decline started and we met the recession. Again, 2011 we started to go down, to reduce the index, the chart was started to declining. And what do we see? Then we see the COVID crash. What do we see now? Let's take a closer look. So we had really huge, I would say, well, huge upwards movement after the COVID, and then we started to struggle and to decline at exactly the same point as it was just before the COVID. Now again we are starting to struggle and to go downwards. Where it can lead us, I don't know. I am not trying to guess, that's just what I see on the chart and that's what I am sharing with you, that's it. And according to all that information I just showed you, all those macro trends indicators, it's not the RSI, it's not the MACD, it's not even the moving average of the price. It's let's say it's the macroeconomical indicators. It's something more fundamental. So I showed you the capacity utilization rate. We started to decline and going downwards. I showed you industrial production, that it's not growing for now. We're struggling to break through the 103, 104 level. And most probably we may face some downwards movement soon. I showed you US unemployment rate. Now we are on the lows and we just started to rise. And look at that chart. How do you think, how is the probability that, at least for now, we might have the volatility zone? It won't be a flash crash like immediately. No, I don't think it will be like that. But what it can be, actually, it will be the downwards movement with some corrections to the upwards and again, more, bigger lag down. When did we have something similar? Let's see on the chart. I believe that here's the situation. We had it back in the 2023. We started to decline, correction, decline, correction, decline, and then only here was the turning point of the market. If we speak about the markets, about the COVID, when it started. So again, as you can see, the price was starting, to get those declines. So let's see on the chart. When we did already have kind of similar situation. And of course the first economy crisis I can remember for now, it was the COVID. But that's not really what we can have now, because now we have much less volatility, because that was a real flash crash. But let's see when we had the kind of the same. We had in the 2018 we had kind of similar situation. I believe we can have now. If we measure, it was the drop for 20%, and that's really huge number for the S&P. So again, we started to struggle to break through, we started to decline, and then we got this big move, correction, some volatility, some this consolidation, and then again big move. And only here we had the turning point. If we get back, let's say, to the 2008, again, it wasn't the flash crash, it was gradual reduction. We had move, correction, again move, and again correction. And that was like that. We had those trend down, correction to the upwards, trend down, correction to the upwards. And only then, like after 1 year of this downtrend, we had the turning point of the market. So what I'm speaking now, what I'm talking about, do not be scared. Just prepare for this situation when the S&P and your stock portfolio is not going to the upwards and actually is reducing. Just make sure you have enough cash amount to buy those dips. Buy gradually. Do not try to buy the all-in on the first correction. No, just wait patiently and gradually build your new position. So if you did enjoy the video, press the like button, and of course see you on the channel. Subscribe. See ya.